Bitcoin, the original cryptocurrency, has been on a wild ride since its creation in 2009. In the year 2021, the price of one Bitcoin surged to over $60,000, an eightfold increase in 12 months. Then it fell to half that value in just a few weeks, and is still going down due to the unprecedented time of the Russia-Ukraine war. Previous years, we have seen values of other cryptocurrencies, such as Dogecoin, that have risen and fallen even more sharply, often based just on Elon Musk's tweets. Even after the recent fall in their prices, the total market value of all cryptocurrencies now exceeds $1.5 trillion, a staggering amount for virtual objects that are nothing more than computer code. Welcome to Crypto Trends, and in today's video, you will get to know why I'm going all in on altcoins soon. Let's see. So make sure to watch the video till the end, and don't forget to like and share the video. Let's get a real quick overview of Bitcoin. Bitcoin was created by a person or group that remains unidentified to this day as a way to conduct transactions without the intervention of a trusted third party, such as a central bank or financial institution. Its emergence amid the global financial crisis, which shook trust in banks and even governments, was perfectly timed. Bitcoin enabled transactions using only digital identities, granting users some degree of anonymity. This made Bitcoin the preferred currency for illicit activities, including recent ransomware attacks. It powered the shadowy darknet of illegal online commerce, much like PayPal helped the rise of eBay by making payments easier. As it grew in popularity, Bitcoin became cumbersome, complicated, complex, slow, and expensive to use. It takes about 10 minutes to validate most transactions using the cryptocurrency, and the transaction fee has been at a median of about $20 this year. Bitcoin's unstable value has also made it an unviable medium of exchange. Moreover, it has become clear that Bitcoin does not offer true anonymity. The government's success in tracking and retrieving part of the Bitcoin ransom paid to the hacking collective DarkSide has heightened doubts about the security and non-traceability of Bitcoin transactions. While Bitcoin has failed in its stated objectives, it has become a speculative investment. This is puzzling. It has no intrinsic value and is not backed by anything. Bitcoin devotees will tell you that, like gold, its value comes from its scarcity. Bitcoin's computer algorithm mandates a fixed cap of 21 million digital coins, and nearly 19 million have been created so far. But scarcity by itself can hardly be a source of value. Bitcoin investors seem to be relying on the greater fool theory. All you need to profit from an investment is to find someone willing to buy the asset at an even higher price. Despite their high valuations on paper, a collapse of Bitcoin and other cryptocurrencies is unlikely to rattle the financial system. Banks have mostly stayed on the sidelines. As with any speculative bubble, naive investors who come to the party late are at the greatest risk of losses. Bitcoin is not innocuous. Transactions are processed by miners using massive amounts of computing power in return for rewards in the form of Bitcoin. By some estimates, the Bitcoin network takes as much energy as entire countries like Argentina and Norway, not to mention the mountains of electronic waste from specialized machines used for such mining operations that burn out rapidly. Bitcoin has spent much of 2018 in middling territory, at least compared with its thunderous highs late in 2017. While a price between $6,000 and $7,000 is certainly nothing to write off completely, it remains far below the leading digital currency's high point of close to $20,000 just before the start of the year. Some analysts have speculated that a bubble has burst for Bitcoin, while others suggest that the dwindling value is a result of fading interest among investors. Regardless, most of the year by now and the previous year has seen Bitcoin on the decline. Still, for many investors, there remains a sense of hope that the cryptocurrency could once again rise to or even exceed its former levels of prominence. For every Bitcoin and cryptocurrency follower, it seems that there is someone else calling for a price of $100,000, $200,000, or even $1 million. There are reasons to be skeptical of some of these predictions, certainly, but they nonetheless help to buoy investor opinion of Bitcoin. Some industry experts, though, believe that Bitcoin will never again skyrocket in value as it has in the past. Below, we explore some of the reasons for this argument. While Bitcoin's roller coaster prices garner attention, of far more consequence is the revolution in money and finance it has set off that will ultimately affect every one of us for better and worse. But when one is investing for the long term, you want to make sure the underlying cryptocurrency project has a strong feature development plan, including the addition of new features, partnerships, and updates. These should help support the corresponding token's price over time and attract new investors to the project. If you're new to cryptocurrency investing, it's easy to fall into the trap of thinking Bitcoin and Ether, the native cryptocurrency, are the only solid, safe investment options in the market. And while many maximalists might agree with you, alternative cryptocurrencies, also known as altcoins, are clearly on the rise. According to the latest data, Bitcoin dominance, as measured by market capitalization, has fallen from 69% to 42% of the value of the total crypto market over the last year, while altcoins have risen from 11% to 21%. Non-fungible tokens, or NFTs, and DeFi-related protocols are two likely catalysts for this change, as an increasing number of holders diversify into tokens tied to the rapidly growing ecosystems. Diversification is important for managing and growing a portfolio, particularly if you're new to investing. As U.S. billionaire Warren Buffett once said, diversification is protection against ignorance. Isolating your investment to 2 coins out of the over 17,000 plus possible options can not only amplify your risk, but can also minimize your potential profits. As such, it is advisable to look beyond the appeal of Bitcoin and Ether and consider allocating part of your portfolio to other promising crypto assets. So, what are altcoins? Altcoins are cryptocurrencies other than Bitcoin. They share characteristics with Bitcoin, but are also different in other ways. For example, some altcoins use a different mechanism to produce blocks or validate transactions. Or they distinguish themselves from Bitcoin by providing new or additional capabilities. For example, such as smart contracts or low price volatility. There are over 14,000 cryptocurrencies. Bitcoin and Ether alone accounted for nearly 60% of the total cryptocurrency market. So-called altcoins made up the rest. Because they are often derived from Bitcoin, altcoin price movements tend to mimic Bitcoin's trajectory. However, analysts say the maturity of cryptocurrency investing ecosystems and the development of new markets for these coins will make price movements for altcoins independent of Bitcoin's trading signals. Altcoins improve upon Bitcoin's perceived limitations to establish a competitive advantage. Several altcoins use the proof-of-stake consensus method to minimize energy consumption and the time required to create blocks and validate new transactions. Altcoins generally address the traditional critiques of Bitcoin, like scalability and sustainability. By distinguishing themselves from Bitcoin in this manner, altcoins have created a market for themselves. In turn, this has attracted investors who see potential in them as alternatives to Bitcoin. The investors expect a profit as altcoins garner more traction and users and appreciate in price. Cryptocurrency trading and use have been marked by volatility since launch. The current state of affairs in the altcoin markets is unlikely to consolidate into a single cryptocurrency, but it is also likely that a majority of the more than 1,800 altcoins listed in crypto markets will not survive. The altcoin market will coalesce around a bunch of altcoins, those with strong utility and use cases, which will dominate the markets. For investors looking to diversify within crypto markets, altcoins are an inexpensive way to expand their horizons beyond Bitcoin. Rallies in cryptocurrency markets have produced returns that are multiples of those produced by Bitcoin, but there are risks involved in altcoin investing, not the least of which is the absence of regulation. The maturation of cryptocurrency markets will likely bring more sophistication and capital into the industry, paving the way for regulation and less volatility. So which altcoins will add value to your crypto portfolio? In this video, I have 2 recommendations for you to add to your portfolio. The first one is Solana. Solana is a fast-emerging blockchain ecosystem looking to displace Ethereum as the largest hub for decentralized applications. Solana's goal is to create a more affordable and faster means of accessing and transacting on the blockchain apps. In particular, it focuses on optimizing decentralized finance, or DeFi, such that DeFi apps can become accessible on a larger scale. Moreover, it has begun to make moves in the NFT space, thereby creating more reasons for users to engage with its network. As such, SOL, which is Solana's native digital asset, has increasingly appealed to investors and DApp users alike, such that its price grew by over 10,000% in 2021. Also, the network hosts a vibrant staking economy with over 74% of the total supply of Solana currently being staked. For those unfamiliar with the term staking, it is the process of depositing or locking away an amount of tokens on a blockchain to become eligible to take up the role of a validator or an active participant of the network and in turn earn rewards. The second altcoin in my recommendation list is Cardano. Similar to how Solana is trying to dethrone Ethereum, Cardano has created a highly sophisticated infrastructure designed to eliminate some of the flaws of established crypto networks. While the development of Cardano kicked off in 2017, it was not until 2021 that the team launched an upgrade that allowed the blockchain to provide smart contract functionality. This made it possible for Cardano to host and facilitate the creation of native decentralized applications that use smart contracts for their operations. Due to this infrastructural advancement and other factors, the native token of Cardano experienced a 650% gain in 2021. It is also worth mentioning that Cardano is one of the most attractive staking ecosystems, with 64% of Cardano's total supply currently being staked. Altcoins can become large, overthrowing the currently all-time high crypto. Investing in altcoins is risky, but it also gives you the opportunity to increase your wealth with greater percentage, just like Bitcoin once did. So guys, that's all for today's video. If you like this video, then give the video a thumbs up and smash that subscribe button so that you will never miss any updates.